The trade war is on hold for now. Trump is calling it a victory after Canada agreed to do exactly what it offered 3 weeks ago. Welcome to another 4 years of economic uncertainty, where policy changes on a whim and markets are left scrambling to react. So what does this mean for PC? Well, I'm going to dive into that. For manufacturing, it's more bad news. If you're an automotive parts manufacturer, you're probably still weighing your options. Some will stay, but others will start shifting operations to the United States. If you're running any business that exports heavily to the US, this uncertainty makes investing in Canada a serious risk. The slow collapse of Canadian manufacturing continues, and the Bank of Canada knows it. A recession is looming, and the Bank of Canada is more open to rate cuts than it was before this latest round of tariff insanity. Bond yields initially dropped, but have since retraced, holding just above the recent 2-week low. That means we won't see 3.69% mortgage rates anytime soon, but 3.99% rates are still very much in play. If you're renewing your mortgage, do not take your lender's first offer. If they're offering 4.59% for a 3-year fixed, you can find 4.29%, 4.19%, or even 4.09% at another lender. Banks rely on borrowers not shopping around. Prove them wrong. And don't get too comfortable. This tariff standoff will be back in 30 days, bringing another wave of uncertainty, financial market swings, and rate volatility. Expect rapid movement in bond yields as the market reacts to whatever version of chaos comes next. The only question now is, how prepared are BC homeowners and buyers for the next round of economic whiplash?